Welcome back to the first episode of Trade Links in 2026. We are still here. Brought to you by NatWest. My name's Tim Phillips. And welcome back to our regular panel. Aastha Gupta, European Economist, Economics and Market Strategy at NatWest Markets. Hello, Aastha.
Hi, Tim.
Also, Scott Livingstone, International Advisor, NatWest Group. Hello, Scott.
Hello, Tim.
It's great that we're all here together because we have a lot to talk about today. They are already calling it the curse of trade links. Last month, the team were discussing what we should be talking about for our first episode of 2026, and Scott and Aastha said I should be keeping my eye on Venezuela. And what happened next? Do they know something we don't? Well, the answer is yes, as usual. So today, we are going to be talking about coercion as trade policy. Okay, Scott, everyone will know what just happened. The difference is that you predicted it might happen before it did. So why did you think that? And why did you think it was going to be happening around now?
We do need to talk about Venezuela, Tim, even though other issues are on the horizon, because it shapes and it illuminates, I think, the US foreign policy, certainly in the Western Hemisphere. And I think I had two reasons for having a sense that something was going to happen around Venezuela. One was the rather obvious reason of the largest, most powerful warship in the world floating just off the coast of Venezuela. The second one was actually the intention was written down and published in December in the American National Security Strategy. If I may, I'll simply quote a key line, I think. This is a statement of intention from that strategy. We will deny non-hemispheric competitors the ability to position forces or other threatening capabilities or to own or control strategically vital assets in our hemisphere. Now, that's the quote, and I'm emphasizing some key words. But I think the position of the Trump administration towards its near abroad was made clear, and there was a flotilla off the coast that couldn't be there forever without something happening. So something had to happen. And my judgment was it was very unlikely to be an invasion, much more likely to be some form of demonstration of singular force, which is indeed what we saw.
We begin in Venezuela, where a stunning regime change is playing out as the world looks on. We'll break down some of what's going down based off of our reporting at the time of this taping. On Saturday, U.S. military forces captured and removed President Nicolas Maduro, the now deposed leader of the South American nation, following weeks of rising tensions between Venezuela and the U.S.
We're always saying, if only politicians would tell us what they think. And we have a politician now who tells us exactly what he thinks. We need to take notice of it. Now, Aastha, when we're talking about why this has happened, well, one thing Donald Trump has said is he's done it for oil.
They had our first thing is they said, we have 50 million barrels. Hard to believe, Eric. I said, is there such a thing as 50 million barrels? 50 million barrels of oil. And we have to get it processed immediately because we have no room. Will you take it? I said, we'll take it.
How does that work? What are the consequences if he takes Venezuela's oil?
At first, it does sound dramatic.
Yeah.
But what's really happening is a lot more technical. It isn't about US owning the Venezuela's oil. It's about controlling the revenue stream. So under a recent executive order, any money that is made from approved Venezuela's oil sales isn't going back to the country's government coffers like usual. Now it's being classified as foreign government deposit funds, and they're being held in US Treasury accounts under US control. And that creates something like the national level escrow system, where the oil is sold, but the revenue is ring-fenced. And this basically does two things. First, it gives US control over how that money can be used, in theory for things like food, medicines, humanitarian needs, etc. And second, which is a lot more crucial, it protects money from Venezuela's oil creditors, who would otherwise try to seize it to pay off decades of unpaid debt. Now, the big economic issue is of scale. So Venezuela's oil infrastructure has been decimated. Estimates suggest that it could take tens of billions just to keep the current production flat, and as much as around $180 billion to rebuild it to historical levels over the next decade or two. And that kind of money won't come in unless investors believe that the revenues are legally protected. But it also means that Venezuela's most important asset is being managed externally. So on one hand, it may stabilize output, but on the other hand, it also raises hard questions around sovereignty and long-term investment.
Yes, investors, they've been burned in Venezuela before several times, so you can imagine why they might be reluctant. But that question of sovereignty, Scott, a lot of people, me included, asked when this happened, can the US actually do that?
I would say yes. It depends how you emphasize the question, Tim. Is it lawful to do it? Then that's a question to be raised, I suspect, in political circles, and then we end up having a conversation about the UN, and the UN appears to be rather stymied and rather stuck at the moment, so that's a separate conversation. But if the question is it possible for America to exert arm's length control over a nearby state, I would say yes. Now, it won't be pretty and it won't be always neat, and it will feel very uncomfortable to all outside observers. But the idea that the American government, the Trump administration, can use carrots and sticks to motivate the government of Venezuela to comply in a small number of key policy areas. Aastha's mentioned oil control, for example. I would also point to any illicit flows, whether it be narcotics or people, and whether it be the support of deemed to be hostile states, China and Cuba, I would say in particular. If that's the question, is it a question of practicalities? I would say yes, it is possible, and I suspect that's exactly what America will do.
So this sort of explains why they didn't attempt any kind of regime change. It's exerting control whilst leaving the same nominal power structure in place.
Indeed, it's more to do with regime behaviour rather than regime change. And I think there is a lesson that security officials in the States and elsewhere have learned from the first 2 decades of this century, that regime change and then regime occupation and regime forming is incredibly difficult and expensive. And I think there is a sense that this remote control with a very narrow agenda is more achievable and much more efficient.
Now, Venezuela has been a rogue state for many years. And so this had to happen sooner or later. It happened now, but it had to happen sooner or later. What are the consequences for the rest of Latin America, economically and politically? Economically, first of all, Aastha, what should the other Latin American countries be thinking right now?
So economically, it could create shifts for regional energy security. So if Venezuela ramps up production, it becomes a direct competitor to other heavy crude oil exporters in the region. And more supply could push prices down for heavy crude, which is good for refiners on one hand, but not so great for other producers' revenues. On the upside, lower prices could mean cheaper fuel across the region, which helps consumers and businesses. But there's always a catch. Rebuilding Venezuela's oil sector is going to soak up huge amounts of investment, as I said earlier as well. And that high-risk capital might otherwise have gone into projects in other countries. So there's a real risk of other regional projects being underfunded. So overall, the economic picture is mixed. More supply could mean lower prices, but also tougher competition for investment and financing in Latin America.
Yeah, because we have to emphasize that Venezuela's oil is not the best stuff, is it? Rather like a lot of oil in Latin America, it's expensive to get it out of the ground.
Yeah.
Scott, what are the consequences geopolitically for Latin American countries?
I think I'd really view this through 2 lenses. Domestically, but this will send a chill through all governments in the region, simply because of the demonstration of military competence, the demonstration of political will that the events in Venezuela will have made abundantly clear to all governments in the region. There will be crisis meetings discussing vulnerabilities and risk registers and everything in all of the governments, because they will all be looking to find out what is their position when it comes to this national security strategy, this endeavor by Washington to exert control over the hemisphere. And so there will be policies being constructed now, whether to engage, whether to comply, whether to resist, whether to negotiate, or whether to deter America. But that's what will be going on across the region. Now, there's a difference if you're Colombia compared to, for example, Brazil. The scale of Brazil brings a value all of its own. But as I said earlier, Tim, I think the key countries to be looking at here that will be feeling particularly vulnerable will be Mexico, Colombia, and Cuba in particular. I think it will be irresistible in Washington not to springboard from the success as they see it in Venezuela into putting further pressure on the Cuban regime. Something like a third of Cuban oil imports come from Venezuela. The energy dependency on Venezuela, as well as other dependencies for security, for example, in some technologies, is meaningful. And I think we will this year see further pressure on Cuba coming from this new muscular American policy in its region.
I can understand the policy towards Cuba because it's a weak regime and the United States has been politically an enemy of Cuba for our entire lives. But Colombia and Mexico, they are strong, independent countries with allies in the region.
With allies in the region, for sure. I think the set of relationships that Washington is increasingly seems to be wishing to control, to choke off, are the relationships with what they perceive to be potential threats. China. So I think we are seeing a reconfiguration or a rebalancing of influence in the region. And many people I speak to would suggest that America has been asleep at the wheel for the last 10, 15 years, as China's Belt and Road Initiative has moved into Latin and South America and has bought many concessions in agricultural domain and fishing and energy and infrastructure. There is a sense that Washington has woken up to this, and within the Trump worldview or the MAGA worldview, that is intolerable. It is intolerable that America's hemisphere, and I'm using air quotes here, can be under such control of a potentially hostile foreign superpower. So I think we are seeing a rebalancing, and it will be one of the themes for the remainder of this Trump administration.
If we're talking about spheres of influence, then now, is there a consequence for Russia as well of the action in Venezuela?
Well, the short answer is yes. The ability for Russia to project influence into Latin America through a friendly regime, a friendly government and friendly institutions in Caracas was clear, and it will be a setback. The ability for Russia to project a message across the global south that it mattered, that it had global reach, not simply sort of a local neighborhood reach in Eurasia, was important. And from a Russian point of view, the rendition of Maduro will add to a list of friendly regimes that have been challenged, starting with the Assad regime in Syria, for example, the Khamenei regime in Tehran, and most recently. But those are three friends, international friends of Russia, that have suffered significant blows in the past 3 months.
Economically, Aastha, what are the consequences for China and Russia?
This policy puts real pressure on both the countries. For China, they had owed about $10 to $12 billion in oil-backed loans from Venezuela. And with the US controlling those payments, the loans are effectively into technical default. And China's smaller teapot refineries could see those imports drop by a significant margin, disrupting their refining operations. And for Russia, I think the story is all about the government revenue. The Russian budget relies on high oil prices. And if the Venezuelan oil returns to global markets, it increases supply, which could push prices down to about $50 to $60 range per barrel. And lower prices would mean less income for the Russian government, which has direct economic consequences for spending and fiscal stability.
We end up talking about the oil price for more or less everything, don't we now? And that has disadvantages as well, pushing the oil price down. It's not a simple lever to push, is it?
Yeah.
Scott, if the oil price goes down, there are geopolitical consequences all over the place.
There are. You can scoot across the globe. I mean, the generally assumed belief is that Saudi Arabia, that MBS, to achieve his Vision 2030 program, needs an oil price of around $80. So it's already low. So there's a squeeze on resources and ambitions in the Gulf. I think Aastha's point about the impact on the Russian economy is significant. I think we are seeing signs that the Russian economy is being squeezed. The war effort, the war economy is not straightforward for Russia to maintain. So I think oil price would impact there. And of course, the oil price would impact on the viability of domestic production in the States, the cost of fracking oil. My understanding is that there is a glut of supply, that there is a long-term projected reduction in demand, particularly as China becomes more dependent on electricity for much of its energy requirements. And so I think the inevitable slide of the price is something we need to factor in. But you're right, Tim, it echoes across the globe.
Will someone just think of Saudi Arabia in all this? Should other countries in the region be looking over their shoulders just in case American special forces turn up?
Well, I think in that dramatic sense, I think it's the three I've mentioned. I think Mexico, Cuba and Colombia, not in any particular order, but I think certainly those are the ones that the Trump administration have particularly pinpointed. We've got to be wary of two things, I think. One is the Latino vote in the States, in the midterms coming up. There will be an effort for the Republicans to regain some Latino vote. They did very well in the presidential election. A slight dip when we've seen some of the immigration actions happening in US cities. So there will be an effort to recover some Latino vote. Keep an eye on timings regard to the midterms and timings regard to the World Cup. We have a World Cup happening. We have a World Cup happening in partnership with Mexico.
Yeah.
That's June and July, midterms in November. So I suspect those factors will influence the tempo and the sequencing of pressure. But I don't see at the moment indicators that we are in such a dramatic position of the use of military force. One other point on regional implication from the US action in Venezuela, Tim. It is a downside for China and Russia. It pushes back on their influence for sure. Maduro has been removed in a regime that is being controlled at arm's length. However, there is an upside, I think I could argue, and that would be mostly for Beijing. And I think there are two we could keep an eye open for. The first one is the playing of the script of spheres of influence, of the responsibility for near abroad. You can see how Beijing could flip that same narrative and apply it regarding its near abroad, and particularly to do with Taiwan. So I think there is an anticipation that use of that justification for US intervention in Venezuela could be used by the Chinese with regard to justifying action to do with Taiwan. And this second point is a much broader point, which is I think the US action and the manner of the US intervention in Venezuela and now Greenland will feed into a Chinese narrative that's already in existence in the global south, that China is the country that sticks to agreements, that is reliable, that conducts its international affairs according to a rules-based framework. That's a remarkable and deeply ironic shift. But I think that is the narrative that we could see Beijing play in the global south. And I think they would point to the US behaviours in Venezuela and now some of the messaging around Greenland to justify that point.
I'd like to talk about one other aspect of coercion today, and that's looking at sanctions as trade policy. There are many types of sanctions, though, aren't there, Aastha? Take us through that.
So, Tim, I'd frame sanctions along what part of the trade systems they tend to target. First would be financial sanctions, because they restrict access to banks, capital markets, and dollar clearing. And I think these tend to be the most powerful because trade ultimately runs on finance. The second one would be trade and sectoral sanctions, which target exports like oil, gas, technology, or arms. These directly hit productive capacity. The third would be targeted sanctions, which are basically aimed at individuals or firms, such as asset freezes, travel bans, etc. And the fourth would be secondary sanctions, which basically punishes third parties for going into business with the target. So examples, the one that you quoted earlier, that US embargo on Cuba, which has prevented US businesses and citizens from conducting trade or commerce with Cuban interests since 1960s. The more recent one would be US targeted sanction, where it restricts US companies from selling technology to blacklisted Chinese firms like Huawei, citing national security concerns.
Scott, any sanctions on your mind?
I'm trying to track the impact of sanctions on Russia's ability to maintain and sustain the war.
Yes.
And there are some fairly recent data points suggesting that that is not plain sailing for the Russian economy. We have seen a revision of how we view the impact of sanctions on Russian economic growth. But the sustainability of this economy, I think, is under question with some fairly reliable data points. So there is a sense that sanctions, they're not a silver bullet in terms of achieving foreign policy objectives, but they do have an impact over the longer term. And I think if you want another example of that, I think Iran is an example of the political pressures that over time have been generated or at least amplified by a long-term sanctions program.
One of the problems with sanctions, though, Scott, is they require everyone to act together. If a few people put sanctions on a country, well, that doesn't make much difference. Is this still possible now that multilateralism seems to be over?
It's a tad early to say that multilateralism is over. I think
I did go there early, didn't I?
I think multilateralism is changing shape. I think we're seeing, with an assertive America first, America alone, it often seems that we are seeing this multilateralism, whether you're looking at the UN or whether you're looking at a more localized group of ASEAN or NATO, or I think you can see the obvious fracture points in the alliance of trust and common values that would underpin, as you say, a group effort to impose sanctions. But it still can be done. The EU's application of sanctions against Russia, I think, could be seen as a bit of a masterclass in how to bring coherence around a sanctions framework in the face of objections. Mm-hmm. And I would point to how the EU handled Hungary in conceiving, constructing, and then implementing a sanctions regime, which was really a rather smart sequence of negotiations and deals and exemptions that allowed, nonetheless, in the face of these objections by Hungary, allowed the EU to impose a number of sanctions against Russia.
Aastha, if we think about this economically, we're taught in economics that sanctions are problematic because they tend to hurt the country that's doing the sanctioning more than the country that is being sanctioned. Has this been true in reality? Are there examples economically where they have had a bite?
Tim, that's the classic sanctioner's dilemma that you just quoted. Historically, sanctions have only worked about 1/3 of the time. They could achieve major political goals. They usually work best when the target is really small, when the goal is limited, and to Scott's point earlier, when there is a strong international coordination. Two often cited examples where they have worked. One would be South Africa under apartheid, where nearly universal sanctions applied serious pressure. And the second would be Iran in the early 2010s, when cuts to oil exports and financial access pushed the country to negotiate the Iran nuclear agreement, which is formally known as the Joint Comprehensive Plan of Action.
Imposing sanctions does draw a map for the sanctioned country of what measures are being taken against it, which then, if they're thinking creatively about it, will inspire them to get around those sanctions. How do countries evade sanctions?
So recently we've seen that evasion has become a lot more industrialized. We see trade routing through intermediaries, false invoicing, reflagged shipping fleets, ship-to-ship oil transfers, barter trade, and payments in non-US denominated currencies like yuan, dirhams, or even gold for that matter. And technology also helps in this case, where firms using jurisdictional gaps faster than regulators can actually close them. And the irony is that the sanctions often increase trade opacity, making it harder to monitor flows and enforce standards.
Scott, evading sanctions does seem to be pretty easy.
Well, I don't know if it's easy, Tim. I will reach out for a bit of an upside to sanctions evasion or the practice. Is it becoming more common? Is it industrialized? As I said, I agree. I think one point on sanctions evasion, just to bring into our outlook on this, you framed the question, how do states evade sanctions? In my experience, what very often happens is that elites evade sanctions.
Right.
So
yes.
We see sanctions levied against the state with the aim of adjusting the behavior of the state. And what actually happens on the ground is the elites who make the decisions find ways to insulate themselves from the effect of sanctions. So sanctions evasion takes place. Very often the people who benefit are the elites. And unfortunately, the sanctions have a downside on the masses of the country, which can then provoke resilience, actually, rather than weakness in the state apparatus. The upside of sanctions evasions, I would argue, is that sanctions evasion pushes elites or institutions, state institutions, into the grey zone, into clandestine space, and very often in a way that can become the subject of investigation by other agencies in other countries, which can illuminate how the state behaves in other ways. So when you pick up people smuggling gold or smuggling oil, you can also pick up people smuggling weapons and other components. So there is a means here. I'm not saying it's the recommended way of controlling illicit flows. By pushing these flows into the illicit space, they can become the subject of investigations.
I went too soon on the collapse of multilateralism. However, we are in a different place now. I want to ask both of you, what will be the consequences if coercion, either through military force that we've seen in Venezuela, economic sanctions that we're seeing in Russia and other places now, what if that continues to decide trade policy? Aastha?
I think the global economy would get a lot more fragmented and a lot less predictable. And countries would respond by diversifying the suppliers, building regional payment systems, and stockpiling critical goods. On one hand, that could make them more resilient, but it would also come at a price, which would mean higher costs for businesses and consumers. And over time, it could also lead to firms designing supply chains that are sanction-proof instead of just being resilient or efficient. And that could mean less specialization, slower productivity growth, and potentially even lower long-term incomes.
I agree. I think the reshaping of globalization, really, the patterns we see in global supply chains, I think such coercive behavior would add to that dynamic that's already underway. Supply chains would be shaped according to resilience and reliability rather than profitability. So I think that's already happening. I think that will continue. I think the point of the erosion of the rules-based order really can't be underestimated. It would be a significant issue for the West. And as I said, it could easily play into a Chinese narrative. The balance of reliability and consistency in international affairs has shifted from the West to the East.
So in our final section, as usual, I'm going to be asking you what's on your agenda, something that the rest of us might have missed. Scott, what is on your agenda?
Yeah, I think I said at our Christmas special, when asked what was on my radar, I said, well, I'm going to need a bigger radar. Well, I got a bigger radar for my Christmas, and this radar is obviously picking up Greenland. But beyond Greenland, the incredible tension on the viability of the NATO alliance. But I think we'll save that for another episode because that's breaking news.
We have a whole episode at least on that.
Right now. What's on my radar that other people you might have missed from the front pages? Over Christmas, we've seen, I think, a significant divergence in views within Yemen between Saudi Arabia and the United Arab Emirates. And now originally those two countries were partners in a 2015 campaign against the Houthis. There were differences in approach, and they were backing separate representative groups within the country. But for a while, that seemed to be working in a form of symbiotic relationship. However, in December, we saw a group backed by the Emirates effectively break ranks and make a move on some key territory very close to the Saudi border, which enraged the government in Riyadh. And it led to a diplomatic set of issues between Riyadh and Abu Dhabi. Now, it seems to have calmed, but it's not gone away. And I would offer up that if we see this bifurcation in diplomatic positions or foreign policy positions from the Gulf countries, I think it's worth noticing because it impacts not simply locally, but it impacts well into the near abroad, into Africa, but also with regard to Iran. Should we see a shift in the regime in Iran, which cannot be discounted in the coming year?
Aastha, what's on your agenda?
So I think one thing that's flown under the radar is that a couple of shipping companies are starting to use the Suez Canal again. And because they've avoided it since late 2023 because of the security risks, which forced ships on using the long detours around Africa. And of course, their return sounds technical, but it's actually a meaningful macro signal. It brings back a lot of capacity back into the system at a times when new ships are actually outpacing demand. So that would mean that the freight rates should remain contained. And if Suez traffic moves back towards its pre-pandemic normal, it's a broader sign that global supply chains and shipping systems are finally stabilizing after years of shocks. And it's a matter for prices, transit times, and fuel use. So it's a small headline, yes, but it could have big implications for trade this year.
Finally, some good news. Thank you very much, Aastha.
Thank you, Tim.
And thank you, Scott.
Thank you, Tim.
And thanks to all of you for listening. Follow us, remember. Leave us a review as well, especially a good one. We will be back because we have plenty to discuss. We will be speaking to you soon.